Good afternoon, folks. How are you? To be able to see me. There we go. Bear with you 1 sec. Just want to make sure I can hear myself instead of worrying you on X.
We believe we're the rock.
Hmm. So professional, this guy. He's such a so proficient with his live streaming. Okay, I hear the old man talking. All right, so happy Wednesday afternoon. Hope you're doing well. So I'm going to have just about 15 minutes just to review today, and then I'm going to escape. I may not have any access to X or live streaming tomorrow, depending upon what my wife and I end up doing tomorrow. So we'll have to play that by ear, just so that way, if I don't make a showing tomorrow, it's because I'm off doing pop up things. Okay. So the micro NASDAQ, that's the only one we're going to look at today because I want to get through it and head off and do what I got to take care of. If you haven't watched the live stream this morning, it's important that you'll watch that and then watch this one because everything was explained, real time before it was happening, and then now we have this. Okay, so we had a huge opening range gap, regular trading hours opening range gap, and the previous settlement price way down here. Okay, I'm going to take the end dog off because it's really not. Whoops, took the wrong one off. That one off too. Well, let's just leave it there for now. Okay, this is the regular trading hours opening range gap low, or yesterday 4:14 Eastern time, and we can see it, I guess, easier by doing this. There it is there. Okay, and now since I'm in here, I can snatch this up here, and it's the wrong one again. Let's see if I can be surgical with this. Now my obsessive compulsiveness is not letting me let this go. But I'm going to. I'm going to have to because otherwise it'll drive me nuts. The opening price up here, 9:30 Eastern time, regular trading hours beginning. So that's higher than where we settled here yesterday. Huge, enormous gap, all on some BS about how the Strait of Hormuz is open. There's a ceasefire. Nobody's going to be fighting. Everything's wonderful. Kumbaya, come to Jesus, and there's roast some marshmallows and call it a day. Well, that's obviously not what's happening, and what was likely to happen, and it happened. So we'll leave it at that. With that huge gap opening here, we ran up, cleared out relative equal highs there, and traded to the midpoint of that daily suspension block on M and Q daily chart. It dropped down, took out the sell side. We had several pools of liquidity I outlined leading up to my personal target, which was the low of that daily suspension block. So the full daily suspension block is shaded here in gray. And notice how we were working only in the lower half of that. So if it can't get in the upper half, is that bullish or bearish? It's bearish. So couple that with the fact that we have a huge premium gap all the way down here. So listen, I got to do this, man. It's one of those things. Just there it is now. Come at me, bro. Old man versus old man versus annotations. Old man wins. So the likelihood of the first run is always going to try to make an attempt to get to 70% chance of getting to midpoint of regular trading hours opening range gap. So consequent encroachment of regular trading hours opening range gap, which is there. That's that level. Okay. That's an octant. That's upper quadrant, upper octant, and then the actual high of it, which is 930. This right here is that lower quadrant level of the daily suspension block. So it's this range high in the gray box down to that low. And that right there is the level I told you. When we drop out of this today, should we drop out of it, okay, if it was going to go lower, any retracement intraday should be kept at bay. In other words, come right to that and not come back to consequent encroachment, which is up here. Okay. And I left you with that in the live stream. You can go back and listen to that. But this is first presented to fair value gap. So we have 930, 931 classic first opportunity for the fair value gap to form. And I was telling you while we were watching it live, we wanted to see if this portion in here stays open. Now, there's two things that can happen when you're looking for inefficiencies to be filled in or create patchwork. This candlestick's low to that candlestick's high. So I'm going to annotate that. You guys learning anything this week? Enjoying hanging out with the old man? So we'll just make this white. Why is it gotta be white, Mike? Because it stands out nice like that. See how that does? So we have this candlestick's low, sell sign imbalance, buy sign inefficiency. This candlestick's high. So there's your fair value gap. If while we were watching this on this candlestick, I was telling you, we want to see if this portion here wants to stay open. Okay. In your notes, the bodies, obviously, if they get up into this area here, like it does here, if it leaves that fair value gap, then it's not allowed to get in the upper half. That's institutional order flow. Okay. It's very simplistic. It's visual. It's not complex. The bodies stay outside of it here. The wicks are allowed to tag into it, but we can't get into consequent encroachment there. So rolls over. Look at the bodies. The bodies are unable to come back and touch that. Only the wicks are allowed to do that. So if the wicks are allowed to do that, if we're just looking at the bodies alone, between this candlestick's high and the highest open or close in here, there's a small little separation. It's only being traversed by that one wick. This is the same thing as if we didn't have any wick at all and that small little portion of price action would not have closed in and touched that there. It's stronger if there's absolutely no candlestick portion at all, whether wick or body. But in here, it's the same thing that's happening. Once we leave the fair value gap, come right back up in, that gives us the likelihood of anticipating further decline, trading down to the low end of that suspension block on the daily chart, which is that gray box area shaded here. All of that. So that was my target being met there. And then look how much time it spent sideways like that. See that? And then finally it drifted a little bit lower, and then finally started accelerating. And it did not get down to the next octant. And then watch what price starts to do. It trades above the upper quadrant of the Regular trading hours, opening range gap. That's what this gradient level is, okay? It's anchored to this. So watch if I hit this, you can see it light up over there because this is highlighting the upper quadrant, upper octant, so forth, all the way down to yesterday's 4:14 p.m. Eastern times closing settlement price for regular trading hours. So that's the RTHORG gap, okay, opening range gap. We get above it, start to consolidate around it, sideways, 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 and then draws right back up into this gray box, which is the daily suspension block. Look at the bodies here. You think they're not using that? Where's the support resistance idea with that? It's not there. Market trades all the way back up to what level? What level? And this is not bragging. This is just to encourage you because, again, this type of stuff is not in books. It's not in somebody else's stuff, some dead guy's archaic nonsense. Okay. So, where are the bodies on that? Zoom in here. What are the bodies doing here? This is your key level, this blue line. That's the lower quadrant of the daily suspension block. Now, if you haven't been picking up on what I'm putting down, I'm teaching you how to find the real support and resistance levels that classic technical analysis does not teach. So, if you like horizontal support and resistance ideas, this is how you find them. But when you find them, when price trades to them, if the bodies of the candlesticks can't touch them, and an old man that supposedly only cherry picks with 12 laptops and finds a great deal of success only picking the right laptop out of the 12 to share his correct assumptions, always in hindsight, right? Remember all that stuff? This here, if the bodies can't touch this key level while potentially being bearish, what makes this bearish? I said that any retracement intraday, once we leave the lower portion of this, which is obviously what we did over here, down here, okay? Use the low here and trade it all the way up to that level. I told you the retracements, anything below the gray box, which is the daily suspension blocks low, any retracement into this, it has to be kept at this level here or lower. Now, you tell me, do the bodies touch that level? No. Is that bearish or bullish? As I teach it, as I teach it, think it's bearish because the bodies are not touching that level. So if this is a premium level and the bodies are not touching it, that's the signature that the algorithm lays down for smart money. This is going to go lower. Do you see how consistent my logic is? You can see how it's constantly repeating over and over and over again. Now, think about this tonight. Before you lay down and go to sleep, how did I how did I plug the flux capacitor in, get in my DeLorean, boom, shoot into the future, come back all during the same live stream and tell you that this level here was going to keep every bit of the retracement once we left the low end of this daily suspension block. I know. It's hard to believe it. I know it's hard to believe, but if it comes back up in, it's going to stop dead in its tracks right here. Now, you all know because you've been hanging out with the old man that I teach that the bodies cannot touch when it's bearish. Just like we can't trade in the upper half of a PD array if we're bearish, and we can't trade down in the lower half when we're bullish. Do you see how that phenomenon keeps repeating as a signature? Look here. Look here. That's how Michael learned it. That's how I got it. Okay. Nobody on this planet told me that. Okay. I didn't find it in books. I didn't pay for a mentor to teach me, and you're getting it for free. Be thankful. So that is a signature telling you it's going to go lower. You're going to tell me that supply and demand factors of the buying and selling pressure. That's what happened here. This is what happened. Every one of the buyers and sellers said, "Listen, we got to work together. Okay, we all have to work together. We have to have a community effort. Okay, and we can't let any of the candlesticks bodies touch this line here, because if we do, that's against the rules." Now think about that. Think about that, you clowns that sit out there and say there is no algorithm. Come on now. How many times you have to keep taking an L? How many times do you have to keep seeing these things happen before it happens, but explained in advance? How can any one man be this right this many times? Think about it. Listen, it's not luck. It's not luck. Okay. You're learning the greatest advantage in every one of these financial markets. I'm the guy. Okay. I'm the guy out of everybody on this spinning rock that he chose to spill the beans on this. Now, think about that. That's weird, isn't it? Some Domino's pizza delivery guy, right? Yeah. Well, he could trust me that I was going to spend this much time doing it with y'all and not twisting your arm and saying, pay me so I can buy my expensive cars. Pay me so I can buy my Pokemon collection and fly around on planes I really don't own. Come on, man. Come on. You love it. That's why you're here. You're entertained and you're also learning. Now, once it comes back to this 25% level, the lower quadrant of that daily suspension block, where does it go to? What is it going to do then? What's the key levels? Back down to that low of that daily suspension block. Here you go. What does it do there? What does it do? Think. What is it doing? Well, obviously, it's got to be buying pressure. Okay, and selling pressure, ceased to have an influence over price, and then the buyers came in and overtook the sellers, and then price goes right up into some random voodoo level event horizon. Level, level. There you go. What happens then? Trades down outside of the low of that daily suspension block. Spends time around in it, builds liquidity here, dives down. Not this gap, this gap. Why this one? Because this one wasn't right before that low's taken. This candlestick pierces that low. That's why this candlestick only trades right up to here, immediate rebounds down. Where's it trade to? Another gradient level. Reaches down. Here's the next one. Here's the next one right there. But it doesn't get there, ICT. See, it failed. What do you see? What do you see? What do you see with this level here and this level here? Split that in half. What's this? Oh, that's probably one of those white cough things, right? It's one of those pitchforks. Come on, you love it. You love it. Right on back. Comes right back down. Listen, for decades, I've sat here and watched all of you on the internet pretend that you think that these gimmicks you use have any advantage. You have no advantage. You have happenstance. Okay. And I love the fact that there has been people in history that have had the discipline to have sound money management behind their guesswork, because that's what they are. They're really good money managers with a gambling impulse. That's what that is. They're rolling the dice on the stuff that they look at on the charts. I don't care what you say it is. Level 2 this, order flow that, market profile, footprint, VWAP. Come on now. Everything else is guesswork. It's guesswork. Be honest. You know it is. Nothing else comes close to this. Nothing comes close to this. Market rallies back up. Now watch. As it enters back inside of this daily suspension block, it fails to get to this octant. When it fails to get there, is that bullish or bearish? It's bearish. Now, here's what you start looking for at 6 o'clock in about, I don't know, 19 minutes or so. Where we open up, if we can't come back up into here to clear this high and touch this level here or dig deeper in, if we stay below this all night, that lower quadrant, I would look for that to eventually still try to work its way down to consequent encroachment right here. But now here's the caveat. They're still shooting missiles. They're still doing all the things they said that was supposed to cease. So things could get really animated. It's one of those things where things could happen. It's during the off time. It's the kind of Asian session, and that's when they're doing stuff. Okay, so just be mindful. We don't know where they're going to open this thing up at 6 o'clock. Nobody knows where it's going to open up at 6 o'clock. I can never know where they're going to open it up at. I have to sit myself down and submit to whatever they do at open, and then I can go through the rigmarole of finding what it is that suggests a run higher or lower. But until I get that 6 o'clock opening price, I have to sit still. Just like I have to sit still if I'm trading London, I got to see what the opening price is at midnight Eastern time, and that'll give me high and low of the day, and then I can work with those numbers. Here for Asia, knowing what that opening price is it's so overwhelmingly important. You just can't have any kind of analysis that makes any great deal of sense until that price comes in. So watch and see. They've already left really nice relative equal lows down here, and there's a lot of range still for that opening range gap to be considered on the downside. So we have lots of room still down there. Nothing really, nothing really is bullish. I mean, if you take a step back and think, why did it go up? Because he put a death sentence on an entire nation, said he's going to wipe it off the planet without even using the term nuclear, but everybody had that in mind. Imagine if you lived over there and you heard about that. I'd probably terrify you, wouldn't it? I know it would cause me concern for my family members. It would. So by creating that huge sentiment of fear and expectation, it's going to be shock and awe. It's going to be carnage. And then, oh yeah, by the way, we're going to extend it, and then the market just goes off and lifts up. That's manipulation. That's tomfoolery. That's the government doing things that's going to influence these markets. And you're going to have to either warm up to the idea that this is how it's going to be until he's out of office, or you're going to have to do things a little bit differently. Trade with less leverage, don't overtrade, and demand more technicals. More things to build a confluence around the idea that you think price is going to go higher or lower and where it's going to go to. Try to be nimble. Don't try to get the full runs and be content with enough. If I can come back tomorrow morning, you will know about 7:30. I'll send a tweet on X and let you know if I am. If I'm not, I just simply won't post anything. So you can go about your business and do whatever you're going to do. But I'll try to do my best to do a review in the evening, but I don't know what time I'm gonna get home. So, it's one of those things, it's family first, and I'll catch up with to you whenever I get an opportunity to do so. Until I talk to you then, be safe.